Portfolio Builder members, welcome to our Friday trade alert. We have another winner, and if you took our Thursday trade, we're at a maximum gain on that as well, betting that the TLT would head lower. Excuse my voice today, I'm still getting over a small allergy attack this week. Let's take a look at how to audit our return from Wednesday through today. So first step is to always pay attention to the price of the asset when we entered into the trade. So if we go back to last Wednesday and you look at the last trading price, we can see the SPY was trading at $2.99. We sold to open the 301 call and bought to open the 296 put. So what this did was it cut off our profits if the SPY were to travel above 301 at that level. And on the other side of the coin, if the SPY were to drop dramatically, we would be able to sell our shares because of the put option for no less than $296 a share. So let's see what happened between Wednesday and today. If we come to today's trade alert to get out of the current trade, you can see our put option will expire worthless, so no action on that. It's only worth a penny. Nobody wants it when it's worth a penny. But on the other hand, we do have to exit our short call position. So you can see that will cost $1.21, and that's with the SPY trading up at 302. So to do the math, the SPY gained a value of $3.08, going from $2.99 to $3.02, while our option contracts cost 3 cents initially to put on. I'll just go show you that. So you can see the net debit in the bottom right corner, 3 cents. If we go to today's trade, we just saw it cost $1.21 to get out. So again, right now the options are providing the protection, and they're actually acting as a drag on our returns. Now, once we do think the SPY will top out and just trade flat, that's when we'll try to generate the profits from the options and not from the SPY. If you guys have been following me, back when we had the first round of tariffs the most recent in August, we called the bottom right at 282 after playing the downside, and then switched over to being long the SPY and short the TLT, and it's turned out to be highly profitable. So again, that's how you can audit these returns. And if you are following this trade alert today, the video will not show you today's new trade alert. That's only contained inside your email. So if your free trial has expired, you'll get to keep watching these videos, see what our returns look like, and also see how to audit the returns. But if you want to get the current trade alert, you will have to upgrade your account. So if you go to your email, there's a link to go do that at the bottom of each email. Right now, we have 38% of our portfolio in the SPY, trading at Monday, Wednesday, Friday. We have a Tuesday play currently holding Facebook, although we'll most likely rotate either into Microsoft or emerging markets now that it looks like the Chinese really will do some sort of agricultural purchase. We'll see how the administration reacts to that. If they do start to show some reciprocity, I intend to probably go long emerging markets because it has a good 15% run up from here to get back to its most recent high. Now, in terms of our return, our target return is 1% a month. We've had 2 losing months in the SPY portfolio, but other than that, it's been pretty smooth sailing with a flat return in April as well. Now, if I scroll down and skip by the new trade alert, you can see we're looking at the options chain. Right now, there's no big open interest on the put option side, which tells me the market's not super worried about a crash. Usually it gets in the 50,000 to 100,000 range on the open interest. That's specific strikes when something nasty is about to happen. So that's a pretty good heads up to watch. We can also figure out resistance levels based on where people have sold short their shares of the SPY. So right now the market's looking bullish because of the ECB rolling out its bazooka of stimulus, and now all eyes are on the Fed, which may disappoint, I'm afraid to say, next week. We'll take a look at that in a minute. Here's that chart of the SPY, and again, we called the bottom in this area right here and have rode it all the way to the top. So if we calculate the profits on this, that's $1.84 a share. Now in this portfolio, we have 1,700 shares. So in the last 48 hours, that's $3,128 of income. Okay, so today's trade is very similar to Wednesday's trade. Again, if you do want to get the actual trade today and next Monday, consider going to your email, see if you have it. If you don't, you need to upgrade. Now, real quick, I have a short little presentation about what we do, and then we'll jump into the macro news. Okay, so a few things about our service. 99% success rate. No other advisory I'm aware of even has a 10% success rate. And that's because we have predictable trade alerts so that it's super easy to follow. You know exactly when the trades will arrive, noon Eastern, and they're very fast to put on. Dean says it takes him 30 seconds a day, but who's counting? My dad says it takes him less time to take out the trash. So why make investing complex? Don't you have better things to do with your most precious asset, your time? My promise to you, if you do follow our trade alerts, is I will protect your assets and show you how to pick the low-hanging fruit. Most of our clients are at least 60 years old. Their time to gamble is over. And because we always have put options hanging right below the SPY and the TLT, it makes it impossible to lose very much money, period. So our options usually act as a drag and actually reduce our profits. So what we'll be looking at today is actually generated with lots of downside protection and drag on our predictions. So we're looking for income and safety, not growth or speculation. Now I will say that a lot of people, including Dean, don't just take the normal trades. They look at the directional predictions, and they can take that with their own strategies and generate even bigger profits. We're not trying to do that in this program. This program is really focused on small, consistent returns. In fact, our return investment target is only 1 to 2% a month. We've only had one losing month when you overlap the SPY and the TLT trade, and we've averaged about 2% a month. And if you watch this daily YouTube video, you'll know exactly the rhyme and reason of every single trade alert. So we have a few options to follow the program, and this is just to give you an idea of how you might follow it yourself. So if you had $66,000 to put to work in the markets, I would recommend 100 shares of the SPY, 200 shares of the TLT. These will be the bulk of your portfolio, where we'll always have a put option below and sell a call option above. Then we are recommending, and have been doing so all year, a buy and hold gold portfolio. Now we've been optimizing that portfolio and actually having a little bit of Bitcoin in there. So we'll take a look at that later too, but that's up tremendously and currently represents 10% of the total portfolio. So if you did this setup, you would trade at noon Eastern. You get a text message and an email plus this video where you can chat with me live. A Monday, Wednesday, Friday trade at noon Eastern for the SPY ETF, taking advantage of the 3 option expirations per week. And then on Thursday, we'll play the bond market, specifically the long end of the bond market through the TLT ETF. So we're not really trying to make money from bonds necessarily. We're trying to play the interest rates, or rather the change of interest rates. This has been our most profitable portfolio this year. And what's nice about the TLT, to a degree, these central banks tell you what they're going to do ahead of time. So that does make our job relatively easy. Also, if you know anything about the stock market, by and far it's engineered to slowly but surely bubble up until inflation ruins the party. So that also makes our predictions on the SPY a little bit easier. We just have to look out for where are the major risks in the road, or rather the potholes, so we can just go right around them. Now, if you want to start off with less capital and actually potentially have a higher return, you could get rid of the SPY trade and do our Tuesday trade, currently Facebook. I rotate that stock to be a single stock that I believe has the best potential for us week over week. So this setup would have 100 shares of Facebook, 100 shares of the TLT. You would trade Tuesday at noon Eastern and then Thursday at noon Eastern. And still recommending a buy and hold of $3.5 thousand versus $33,000 total approximately invested to build this portfolio. Now, for those of you who want to go take a daily trade, we've got a message from Eternal Cynic. Only stupid, ignorant, gullible morons support. Okay, and I also can't even say his name because Google will censor it. Okay. So that's our trading allocations. If you do want to upgrade your account, call Dean 505-322-7515. Let's get you started. Okay, reminder as well, we do have the Wednesday 1 p.m. Eastern paid and the Thursday 1 p.m. Eastern free webinars. This is where we spend about 2 hours together, talk the markets, and get you going as fast as possible with our program. Now, I do recommend you subscribe to the YouTube channel and click the bell so you automatically get this daily video where you can see where we're predicting the markets will go. So, disclaimer, trading is risky and you can lose your entire investment. These results are based on a hypothetical model portfolio, not real money trades. This is not financial advice. Some staff does follow the trades and receives them at the same time as our members. 99% success rate is based on a high rate of customers following trade alerts and getting similar results. This is not an exact measurement. See our full disclaimer at the link. Okay, let's jump into our returns and then we'll look at the big picture. Here's a look at our total portfolio allocation, and you can see how we have the capital split up between the Monday, Wednesday, Friday SPY trade, the Tuesday trade, the buy and hold precious metals portfolio, which has the highest return but the smallest percentage of our total assets, and then that bond portfolio, although the SPY is catching up. Now, I do want to mention that the bond portfolio will not realize the profits. Ernest says, I don't see where to click the bell. Okay, let's see if I can. Right under the video, Ernest, should be a like button and then a little bell. But we also text message you it also, so you get that. Ernest is a member. Welcome to the live stream, Ernest. Thanks for joining us live. Okay, so that's our returns. But I do want to point out that the way our software works, it will not realize the profit on the put option on the TLT until we close it out next week. So again, we do have a nice profit. I'll show you guys that trade really quick. And this is just a bloodbath. We really, I'd say this is my best trade of the year, calling the top on TLT. Exactly at the top, actually. We had about 5 days of lag and then it crashed. And so let's show you how we can actually make safe income from an asset in decline with the same exact setup. And Ernest, did you take the Thursday trade? So that's the TLT. Looks like perhaps Druckenmiller, who's been pitching this since December, made a huge profit. I think he might be taking some profits and causing everybody else to chase the trade as well. Okay, so here's the trade alert we put out yesterday. And you can see at the point of issuing the trade alert, the TLT was trading at 140.93. Nope, that's us getting out of it. This is actually the last trade where we pulled a $1.60 profit betting down on the TLT. Here's the current trade that we're in. and you can see that it is at the maximum profit. So we sold to open the 140 call option while the TLT was trading at 140.84. So that's agreeing to sell it for less than it's worth, but we got a $1.79 credit to put on that trade. And our bet was that this very in-the-money call option would quickly lose value because we thought the TLT would go down. Now that in itself cannot generate a profit if you're holding on to shares of the TLT. The secret a lot of people don't know to generate a safe, consistent profit while actually owning the asset to the decline is to simply buy an in-the-money put. So you can see the put option that we bought was pretty expensive, $1.89. So we had a debit of 10 cents to get into this trade, and now we essentially are able to sell our shares on the put side for 142. So that's more than they're worth. We're just working against the premium now. So at the end of the day, here's your risk chart. This is what I call an upside down collar trade. And so you can see if it went below 140, we got to the maximum profit at expiration. Now, when we bet down, what's nice is the implied volatility of the put has time premium built into it. So we're actually making more money on the downside than this risk chart would indicate is actually possible, because it can only calculate to the expiration what the inherent value would be. It does not take into account time premium and implied volatility increasing. So again, if I pull up that TLT chart, that's some great volatility right there for you. So those put options are becoming relatively more valuable as the acceleration increases. So we're not looking at the speed of the decline, but rather the rate of change of speed. So it's the old physics formula for acceleration, not speed. So that trade is another big winner. I'm not quite convinced that this bond market, bull market is over. So we'll see. I think the 130 to 132 range will be a pretty strong resistance level where I would start to go long again. Also, once I think the SPY ETF is nosebleeding high or into the danger zone, as we say. So I'm expecting that we could see the SPY travel up to 315, maybe even a little higher at some point in October if we get two important news events. Number one, we're going to need the Fed to drop rates 25 basis points and maybe start talking about QE a little bit, just the hint of it. And I think that's Wednesday next week that we have that event. Now, my big fear is that for whatever reason, because of the reduction in uncertainty in the markets, the all-time highs, that the Fed just simply does not drop the rates next week. That could upset not only the stock market, but also the bond market. And I believe that this realization that the Chinese are going to potentially capitulate on the trade deal, at least to some degree, is why we're having this dramatic sell-off. The urgency to be scared and the safe haven play is losing its shine right now. Now, with that said, we'll talk about the Chinese and their history of making promises to us. So I think this is very short term, and again, most likely this will crash into some point in October if we get the Fed only dropping 25 basis points. Bond market most likely will not be happy with that. And then on top of that, China's buying up farming goods. So bond market's going to hate that. And that's what we predicted would happen. As well as Trump reducing some of the tensions, I'm expecting if they buy massive farm goods, and every day it's looking more like they will, that Trump will potentially delay those December 15 tariffs, push the small tariff. This whole rally in the SPY was based on just the removal or the delay for 2 weeks of a 5% increase in tariffs. So really nothing. And we got this huge rally. So I think the potential for this to go much higher is, quite frankly, very likely at this point. Now, in the same breath, I don't think China wants to give up its competitive edge in the world. And so most likely this will be short-lived. It's all happening faster. I did predict all this. I did set our members up to profit from this, but it's playing out at a faster pace than expected. So it's a pretty remarkable period of time to be trading. Okay, so all right, guys, so that's a kind of what we're expecting in the two markets. Let's take a look at some of the big news and how it affects our predictions. And also I'll talk about the Democratic debate last night. Okay, real quick. All right, Ernest took the trade. How much are your put options up on that TLT? I'm just curious. All right, so I watched the Democratic debate last night. The first two rounds I thought were pretty poor. This one went much better, and I'm not going to be trying to be politically biased in our content here, so I'll leave any opinions out, just facts. What I did pick up from the Democratic debate that I found important was that the Democrats were all backing up the idea of pressing China to play fair. So this whole idea that the Chinese might wait out Trump and get a new leader in might potentially not work out for him, because now we've got all of the talking heads on the Democratic side also backing up this tariff fight on China. So that was the single most important thing I found. I'm also always interested in who the media seems to want to win. In the first two debates, I thought it was either Kamala Harris or Joe Biden. But this round, I did not get that feeling. It seemed like they were putting the limelight on Elizabeth Warren, with them still aiming at Joe Biden as the leader. So we can look at all the commentary that came out last night. From my point of view, Joe Biden did a horrible job, fumbled on all the questions. They just keep attacking his past, and he has no real good response to that. So I really don't think he has a chance. But yet we still have people like Bloomberg coming out this morning saying he did great, and all sorts of other media. So definitely interesting. They all want to, Elizabeth and Bernie are very interested in a big healthcare package and all sorts of other benefits. So that's interesting. I wonder what that would do to the stock market. I'm not quite certain it would necessarily crash the stock market like a lot of people say it would, because it would create a whole lot of monetary stimulation. And again, that feeds that government debt until we do get inflation. So that was my take on the Democratic debate. Moving along, in show of goodwill, Beijing exempts U.S. pork, soybeans from trade war tariffs. Okay, so that's the big news today. And on a side note, there people are getting ready to revolt. Imagine 1.4 billion people who can't get access to food, and it's quite remarkable. So they may be up to around an average income. I don't know if this is really true for the whole population, but maybe just the working population, which I still think is a small fraction of their total population. From what I hear, if you go into China, in Hong Kong, it's really pretty, but you go across the border, you got all these people who just 10, 20, 30 years ago were living in wooden shacks and farming rice. So they're sitting around. It's just this sudden wealth China's had. Most of the people aren't really ready for it. But regardless, imagine you make $11,000 a year and you have a 70% tax rate, which is what they have. So not only does the employer have to pay insane amounts of taxes on the labor, also the employee has to pay these super high tax rates. So I was looking into that. So imagine that you're getting a 70% tax rate. I believe they get some options for some free housing out of that, but now your food prices are up 50% on meat and around 10 or 20% on other fruits and vegetables. So that's how you really piss off people. And supposedly what initially created the Tiananmen Square incident, which lasted 6 or 8 weeks before bloodshed. Now you get all sorts of different accounts on how many people really died from that, but it was potentially a horrific period of time. Now everybody's watching Hong Kong to see if that will repeat itself. Chinese imports. So now we're getting some specific numbers. If you do study the way kind of the Chinese culture, from their point of view, The Art of War is their famous strategy book. If you don't lie, cheat, and steal to the best of your ability, you're a weak opponent. It's kind of what I've gotten after listening, and this is from billionaires from China who've fled, who are describing their own party. So that's my account of that. When they were not buying the farming good products, even though they're having all this trouble, I was really worried that this would escalate faster than expected. But now, as we're seeing their currency stabilize, we're seeing reports that they're going to buy some goods. We'll see if Trump is ready to reciprocate. So I think for us to get much above 310 to 320 on the SPY, we're going to need another Trump tweet where he's delayed some more tariffs, maybe those December 15th tariffs, and potentially given Huawei, their phone champion, a little lifeline, because right now it's on the verge of collapsing as we've cut off all of its components. Now, can they replace them? Who knows? They have 1.4 billion people. They have trillions of dollars of GDP a year, 12 trillion. They've sent a lot of their people to America, to the top schools, and brought them back home. So if you thought of their country as a seed, they certainly have planted that seed to be able to completely exclude America from being a requirement to operate their economy. So that's why you get these big billionaires like Ray Dalio and Jeffrey Gundlach and Stephen Druckenmiller going long emerging markets, because they see it. They see that there's 1.4 billion people that will work for next to nothing. They'll give all their money to the government. Government's subsidizing these key industries. They have a huge competitive advantage against everyone else. And even with all this stress being put on them, if the U.S. and China were to break apart, I really don't think they'd have trouble continuing to spy, steal, develop, and start to turn into a developed economy like America. But for the time being, that's a different story. The Chinese have this big report out with all their plans, but they look at the last 100 years as 100 years of shame, and now this is their big chance to get back to the leader of the world, which they've been many times over the past several thousand years. So they were saying this is the moment of weakness when America wakes up and realizes that they may lose the lead and start to take action. So exactly how they navigate this is hard to predict for sure, but as long as we have this balanced portfolio of stocks and bonds, we put our put options below, it makes it pretty hard to lose money, and we can follow the news flow to have a pretty good idea. And again, most of the time, stock market is engineered to go up, and interest rates are typically engineered to just slowly go lower. All right, Hong Kong government is going to get a fireworks show on October 1st, whether they like it or not. So that's when their anniversary begins. And kind of surprised that Hong Kong's still rioting. So we'll see. I would not be surprised if America had their hands involved in spurring up this riot. Last weekend we saw them wearing "Make Hong Kong Great Again" hats, Trump, please free Hong Kong, all sorts of stuff like that. So this must be very aggravating to China. And again, their bigger fear is not being cut off from America. It's their the CCP, the Communist China Party, having a civil war within itself to take over power. These civil wars can last not just months, but not even just years, but decades. There's a really neat Real Vision interview with a historian of China that goes into that. So his biggest fear is really the CCP fighting over control within itself. And when President Xi came to power, he put 1 million of other Chinese leaders in jail so that he could take power. A lot of bloodshed. Meanwhile, you get revolts, think of the Hunger Games or something of that nature. down at all the mining factories is what they have in that movie. Okay, some more Hong Kong news. ECB came out. They dropped the rate 10 basis points. More importantly, they're going to put 20 billion euros, which used to be worth a lot more relative to the dollar than it is today because of all their reckless monetary policy. But yeah, $20 billion a month into these negative yielding bonds. That's pretty insane. So that will take a lot of pressure off the bond market. It may start to peg that interest rate at without allowing it to go much more lower, which is what we thought the bond market was going to demand before it would get out. And so this looks like it may be happening right now. So we'll see if the Fed comes in with some QE news next week. If so, at what price will they be willing to come in there and start pulling the liquidity out of the bond market and freeing up liquidity to go into equities? Or the other angle on the Fed is clearly controlled by the banks. The banks are all in cahoots around the world. We've seen all the other central banks drop rates, start up QE. So it would make sense that they will do at least that 25 basis point cut next week. And it wouldn't surprise me if they started following suit and at least talking about some sort of QE. On the other hand, if you're a banker and you have hundreds of billions of dollars tied up in China in a closed system that you cannot get out very easily, and on the other hand, you're managing hundreds of billions of dollars of the Chinese money, you're not going to like this trade war. And so if you have anything in your power to oust someone who's creating all this friction, that's something I'm also on the lookout for, is this weird antagonism between the Fed and Trump. So that's something to watch out for. Another good reason just to simply put a put option below your equities next week in case they disappoint. Now, I think they won't disappoint and this rally continues. I think that China potentially is in some serious trouble right now, which is why they're starting to buy up the food. They also know they have their big holiday coming up. So we'll look for speeches starting in October as to how they intend to deal with these difficulties they're going through. And more importantly, they're having banks go insolvent. So are they really in trouble and really capitulating, or is this just a way for them to put some pressure off of them while Hong Kong's getting intense, Taiwan's getting intense, and the trade relationships really starting to put pressure on their currency exchange rate? North Korea keeps shooting missiles off. That's also something to keep an eye on. U.S. Treasury Department just issued fresh North Korean-related sanctions targeting 3 groups. This guy, Raoul Paul from Real Vision, he didn't want to short the stock market. Apparently, he lost a lot of money trying to do that, but was long the bond market. And I think he wasn't able to get out at the top. Apparently, well, that's pretty much every significant trade the market had conviction in, taken out and shot. I literally have no clue as to what's going on apart from liquidation of everything. Well, that's not true. We're seeing a clear rotation out of bonds into equities right now. Okay, the banks are lowering the credit requirements, keep this debt-based economy rolling in America. So far, Trump is right. Contrary to expectations of a tariff surge, Chinese imports tumble to 12-month lows. And that, again, is because they've devalued their currency, which makes the cost of goods less relative to the dollar. Kyle Bass, billionaire. U.S. military personnel, along with Pelosi, Schumer, Rubio, and everyone else, should not be forced to invest their retirement money into Chinese companies that aren't compliant with U.S. security laws. They shouldn't help build concentration camps in Xinjiang. And then it continues. It talks about the Board of Thrift Savings Plan for all U.S. civil service employees has sold out to China. They had better reverse their decision to forcibly invest. So the big thing is China has made it illegal to go into the books of their companies. They say it's state secret. So instead we get an ADR report where you just have to take it at face value. Now, sure, we can look at what comes in and out with more reliable trading partners with these companies, but we don't know what they're claiming is happening domestic side. So that's not the sort of securities laws that most companies in America have to, well, it's not the securities laws that American companies have to abide by. So why do the Chinese get these special deals? So deficit is getting more and more expensive, but just think about that creates more budget that gets flowed through the economy. As long as we have the highest yielding bond relative to our competitors, we're not going to have trouble selling those bonds. Keeps pushing the GDP strong and keeps this bull market alive. What's going to end the party, I believe, either massive escalation in the trade war or massive inflation or rate hikes. If they get too confident, start trying to hike those rates back up. Interesting, Germany is banning Facebook's Libra. Here's a look at the price of pork going from 20, or rather as low as 18, up to as high as 34. The toll that protests in Hong Kong have had on local businesses is also becoming more apparent. Data released this week showed the number of tourists visiting the city plunged 40% from a year earlier. So all kinds of trouble in Hong Kong, something to definitely keep a close eye on. Is this what's going to prick the next World War III? Maybe it's in Taiwan. Maybe it's over in the Middle East, fighting over the oil that we're trying to block to China or Venezuela. So a lot of risks out there. China's heading for fiscal and current account deficit amid an escalating trade war. Its response is to encourage FDI. So we're seeing China really have some trouble here. Growth is collapsing. No one really knows what's true or not. This is from Bloomberg. China's, which is odd because I know Bloomberg has a lot of ties to Chinese investments. So it's rare that they will say something negative about China. China's latest welcome to foreigners smells of desperation. Global funds no longer need quotas to buy Chinese stocks and bonds, the State Administration of Foreign Exchange said in a statement Tuesday. So essentially it looks like China is desperate for investment right now. And it's also apparent that they may have been shorting the dollar, trying to control their currency, maybe in cahoots with the bank HSBC, which has been selling off dramatically. CEOs are getting fired. I think they lost a lot of money trying to do that. Here's a look at the currency of conversion rate of the yuan versus the dollar. So you can see it started off at 2 in 1981, devalued all the way to 9 in the 90s, sold off down to 6 by 2015. 2015 is when they first started having some major problems with their economy. Yeah, they can only build 100 million houses so many times before they have literally 90 million apartments that are just concrete blocks built to keep their real estate market growing, but nobody lives in them. And so then once they ran out of places or reasonable places to build these apartment complexes, they switched over to the Belt and Road Initiative. So now they're abandoning all development in their own country, so they go build railroads all around their territory and try to create that big trade route to replace their business with America. Bond market is not buying it. They are demanding a higher relative interest rate for their bonds compared to the dollar. And so despite all this, I do like the idea of going long emerging markets on their Tuesday play for a few weeks if we see that they really do buy farming goods. Because I think if they do buy a lot of farming goods, Trump will reciprocate, maybe not completely stop the trade war, but at least give a period of ease going through the holidays. And again, you got to think he wants to win that 2020 election. So we'll see. at some charts, I think. Okay, here's the key stocks we track, GDX. I like GLD if we thought the price of gold was going to go up. I don't think it will go up. I think the central banks will put a tap on it in this $1,500 range and just massively buy it up. But the people who mine gold now become very valuable because they can mine at a profit. So we're seeing all these mining companies in silver and gold trying to raise capital, get these mining gigs running, and start printing some profits. So that's why I like GDX for our inflation play. If we do see these central banks continue to be reckless and print, then that will make the relative value of gold go up, up, up. Pretty simple to predict on that one. HYG, IWM, looking very strong today, which represents kind of your smaller companies in America. That's important. We need that to really look strong and actually be strong if we want a much longer bull market in equities. So curious to see if that trend continues. LQD is the investment grade bond ETF. I like to track that. As long as that's trading at a healthy level and an upward trend, really more importantly is the upward trend, because that allows these big corporations like Microsoft, Apple, even GE's in that basket, AT&T, to continue to borrow money at lower interest rates, refinance old debts, and mostly they're just buying back their own stock. So until that trend is broken, it'll be very hard to create a long-term sell-off in U.S. stocks, especially at a time when we're seeing all the big banks start to bail on their bond positions, and now they're going to need to reallocate all that capital. So we may have a pretty ridiculous stock boom ahead if the trade tensions can continue on this track. Okay, so here's a look at the SPY ETF. Nice shape, looking to break out. I believe it will get stuck in the 315 to 330 range, which we're calling the danger zone. Now that's if the trade war just kind of stays in this middle ground. If it really makes some sort of long-term truce where Trump potentially removes those December 15th tariffs and also would relieve pressure on Huawei, maybe let the guy's daughter be released, I think that's when we could go above that level. TLT tanking, again, I don't think this is the end of the road for the TLT because I don't think the Chinese want to give up all their competitive advantages in the world. So unless Trump really gave up on these 7 deadly sins that they have been doing, which I don't think will happen, probably this is just an intermediate sell-off, and we'll be set to get back in once the SPY is at nose-bleeding levels. Also, the Fed may change my mind on how to play the TLT. If it's above a 25 basis point cut, we might want to jump back into this bond play sooner. Emerging markets again, it's high back in, I think 2015 is up at 52. So I would love to play EEM on Tuesday, not because I'm really all about trying to promote what that ETF represents, but I think it can make us some serious money on the Tuesday play if what we believe will happen really plays out. So maybe we'll switch to that on Tuesday. We'll see. Here's the Russell 2000 looking very strong at a good resistance level. Can it break through that? If it does, that would be very bullish. Even people like Stanley Druckenmiller use this indicator specifically to indicate the health of the market. There's LQD having a little sell-off, but still very healthy. And again, they just got done raising $100 billion. So they came in, got that cheap rate, and now they can go buy back all their stocks over the next several months. GDX having a little bit of sell-off, but I'm not too concerned about that. Now, if the Fed was too hawkish next week, I would certainly at least buy a put option to protect the position or potentially get out and look to get back in once we get hints that the trade war is going the wrong direction. There's our play on Tuesday, Facebook, which has generated a nice return for us. These are stocks we track in Europe, looking healthy. mainly just looking for warning signs from these stocks, not trying to trade them. Deutsche Bank is the big German bank, and HSBC is the one that's had some sort of dealings with China relative to its currency, and a bunch of people are getting fired, including CEO. So a lot of drama there. Maybe it's because they were doing these big future swaps on the dollar, betting down, and potentially lost a ton of money. So we'll see what comes out of that. This is the top stocks in the SPY that I track as potential trades for our portfolio. The other one I like besides Facebook right now is Microsoft. Apple, a little nervous to do. We did play Apple at a huge sell-off this year and made some good money on that one. But I want to see what's going to really happen with this trade deal. Here's those Chinese companies. Here's the dollar chart. As long as this dollar is strong, that means emerging markets are weak. So will we see a sell-off in the dollar finally if this trade war does come to some sort of resolution? We get the Fed to lower rates a little bit. Be something to follow. This is one of the best leading indicators to predict trouble ahead for stocks, the conversion rate of the dollar to the yuan, and it's having a period of sell-off, meaning the tensions are easing and they're not devaluing their currency right now. So we'll see exactly how low that goes. Here's that euro against the dollar. Been in a slide for quite some time as they continue to have negative interest rates, and now they're back to QE. There's that German bond, which the ECB is going to start buying up. So they may start pegging this rate at some point. We're using this as a leading indicator for the treasuries, for the U.S. Treasury or the TLT. Gold, again, staying strong, even though this trade war seems to be having some major progress. We're not seeing a big sell-off in gold or silver. And then if I scroll really quickly to the bottom, we're also not seeing a big sell-off in the cryptocurrency. So I don't think anybody really believes trade war is over. It's just a period of relaxation. So the stock market's going to jump to a value that would be appropriate if the trade war is accomplished. So it's positioned to hit the big profits after that. So these big banks are the ones primarily playing this, and corporate buybacks, because they can afford to quickly change their position if they need to. Some drama about the ECB's decision. Some of these countries are not happy about the QE. And a couple little quotes out of Bloomberg, and we'll let you guys go for the weekend. Okay, trade hopes rise again. Markets mull the fallout post-ECB, and Biden maintains Democratic lead. So there's Bloomberg hyping up Biden, but from my point of view, I thought he did every single debate. He seemed to be very stumbly and couldn't really answer the questions they brought up about his past in a meaningful way. State-run Chinese newspaper tweets that they have accurately presaged moves by Beijing. Wrote this morning that authorities would encourage the country's firms to buy U.S. farm products. So more news wires out of Beijing that they will do this, not just Trump saying it, so that's important. And that's a wrap. So let's see if we have any questions out there. Monday we have another SPY trade. Tuesday we pick a specific stock. And let's see if we got any questions in the live chat. Any questions out there, guys? All right, guys. Well, that's a wrap. Call Dean, 505-322-7515. let's get you started as soon as possible. Hope everybody has a great weekend, and I hope you guys have been following the trades. We've been on quite a hot streak, and so thank you guys so much.